Good morning, I'm Gary DeWaal, and this is Bridging the Week for January 29th to February 2nd, and today is February 5th, 2018. Last week, the Commodity Futures Trading Commission announced enforcement actions against 4 banking organization companies, a software development firm, and 6 individuals, while the U.S. Department of Justice disclosed it had filed criminal charges against 8 individuals, all in spoofing-related cases. These actions signal significant heightened emphasis by law enforcement agencies in prosecuting spoofing. The CFTC actions and simultaneous settlements with the 4 banking organization companies also provide useful insight regarding the Commission's current views regarding futures commission merchants' duty to supervise, software development firms' potential obligations when they are requested to design custom trading software, and the benefits persons may reap if they voluntarily disclose to the CFTC possible wrongdoing before the Commission discovers it. Last Friday was Groundhog's Day, and apparently Puxatawny Phil saw his shadow, meaning that we will have 6 more weeks of winter. So I can figure out how to stay warm during this stretch of time. Let's get started. Last week, the CFTC and the Department of Justice coordinated announcements regarding the filing of civil enforcement actions by the CFTC, naming 5 corporations and 6 individuals for spoofing or activities related to spoofing by others, and criminal actions by the Department of Justice against 8 individuals, including 6 of the same persons named in the CFTC actions, also for spoofing or conduct related to spoofing by another person. 4 of the corporations, part of global banking organizations, simultaneously resolved their CFTC-brought civil actions. These 4 corporations were Deutsche Bank and its wholly owned subsidiary, Deutsche Bank Securities Inc., UBS, and HSBC Securities USA Inc. Deutsche Bank and Deutsche Bank Securities settled their CFTC enforcement actions by agreeing to jointly and severally pay a fine of $30 million, UBS by consenting to a sanction of $15 million, and HSBC by agreeing to a fine of $1.5 million. All the companies additionally agreed to continue to maintain surveillance systems to detect spoofing, ensure personnel promptly review reports generated by such systems, and follow up as necessary if potential spoofing conduct is identified, and maintain training programs regarding spoofing, manipulation, and attempted manipulation. Generally, Deutsche Bank, UBS, and HSBC were charged for spoofing by their employees on the Commodity Exchange Inc. in gold and other precious metal futures contracts. Deutsche Bank was also charged with manipulation and attempted manipulation, and UBS was additionally charged with attempted manipulation. Deutsche Bank Securities, a registered futures commission merchant, was charged with failure to supervise. According to the CFTC, Deutsche Bank Securities maintained a surveillance system that detected many instances of potential spoofing by Deutsche Bank traders whose accounts it carried. However, said the CFTC, Deutsche Bank Securities failed to follow up on, quote, the majority, end of quote, of potential flagged issues. The CFTC acknowledged each firm's cooperation during its investigation. The Commission additionally noted that UBS self-reported its own misconduct in response to a firm-initiated internal investigation. The CFTC said it previously was not aware of the misconduct. Additionally, the CFTC charged Jitesh Thacker and Edge Financial Technologies, Inc., a company Mr. Thacker founded and for which he served as president, with spoofing, engaging in a manipulative and deceptive scheme for designing software that was used by an unnamed trader to engage in spoofing activities. It appears from language in a parallel criminal complaint filed against Mr. Thacker that the trader he is alleged to have assisted is Navinda Sarao, who previously had been charged by both the CFTC and Department of Justice with engaging in spoofing conduct that, among other things, contributed to the May 6, 2010 flash crash. The CFTC also filed civil complaints against Cedric Chenu, Andre Flotron, Krishna Mohan, James Vorley, and Jiancheng Sheng Zhao alleging spoofing and engaging in a manipulative and deceptive scheme. The Department of Justice announced criminal complaints were filed against the same persons, as well as Edward Basis and John Pachillo. These actions give material insight into the CFTC's current thinking about FCM's duty to supervise, software developers' obligation to ask questions before programming, and the benefits of volunteering misconduct to the CFTC. I discussed my views on this on the website. Check it out. The Securities Exchange Commission brought a lawsuit in a federal court in Texas and obtained a court order halting an allegedly fraudulent initial coin offering. The SEC's action was filed against Orissa Bank, Jared Rice, the CEO and co-founder of Orissa Bank, and Stanley Ford, the other co-founder of Orissa Bank. According to the SEC, Orissa Bank claimed to be the world's first decentralized bank offering numerous consumer banking products and access to over 700 virtual currencies. It allegedly began an ICO in November 2017 with a goal to raise $1 billion US, offering its own digital currency, the Orissa coin. Orissa Bank claimed it had raised $600 million US by the time the SEC halted the ICO at the end of January. The SEC charged that Orissa Bank's ICO constituted the unlawful offer of securities without registration or a qualified exemption. The SEC also charged that Orissa Bank committed fraud in its solicitation. The SEC seeks a permanent injunction, disgorgement, and a fine, among other sanctions. Clearly, the SEC is not tolerating securities issued in ICOs without registration or an exemption from registration previously done. And finally, the U.S. Senate Committee on Banking, Housing, and Urban Affairs will host a hearing on virtual currencies this week on February 6th at 10 a.m. Both SEC Chairman Jay Clayton and CFTC Chairman J. Christopher Giancarlo will present their views on the oversight role of their two agencies over this new asset class. Separately, the Senate Committee on Agriculture, Nutrition, and Forestry sent a formal letter to Mr. Giancarlo asking his view of the CFTC surveillance activities related to new futures contracts on Bitcoin, how safeguards to protect against volatility in Bitcoin futures have performed, how have the CFTC's resource limits impacted its oversight of Bitcoin markets, and what specific information is shared between Bitcoin futures exchanges and underlying Bitcoin markets. The committee also seeks to understand how the CFTC is coordinating with other government entities regarding cryptocurrencies. I am beginning to crystallize my own views on how crypto tokens should optimally be regulated. My views are on the Bridging the Week website. Check it out. Well, that's it for this week's edition of Bridging the Week. As always, there is more information in each article and more articles on the article version of Bridging the Week on the website. Check it out. I'm Gary DeWaal. Have a great week. And until the next edition of Bridging the Week, stay warm and more importantly, ciao!